ask us as City, as advisor, where to list. I mean, we like to say, well, you should list close to home, because that's where your clients are. That's where most of your investors will come from. But that's obviously not always possible, and hence why issuers tend to decide to list abroad. And within the MENA context, obviously London tends to be the major hub outside this country, and there were a few large cap deals or issuers which have decided to go down that route. I mean, including NMC Health, Al Noor, and Damak. Although the latter is actually a good example that a London listing is not necessarily the route to go for all MENA issuers, and they have actually decided to come back to the DFM, and it actually helped their stock liquidity. So I'm actually quite hopeful with the upcoming changes that there will be hopefully a larger push from international investors as well to invest in the local market once sort of liquidity picks up.
When we were preparing amongst ourselves, we ran through a series of particular points that we should share with you as to how we can improve the pipeline actually getting out to the market and then staying liquid afterwards. One of the questions, and I'd like to continue what Dayan was saying, was going for a depository receipt in London or New York versus the home market, and how to keep the home market more attractive. You want to continue some of those thoughts?
Sure. This is a question that I've been answering for the last 3 or 4 years, and is a very valid question, because some investors, especially family-owned businesses, would come and say, why should I list in my local exchange? There's no liquidity, number one, and there's no valuation. So I'm not getting the best deal in doing that while I can do it in London. Now, time has told us over the past couple of years that, yes, a number of companies have done so. They have marked their price by listing in London and getting a higher valuation. But now we're seeing that return back to home markets in different shapes and forms in the 3 companies that Dayan talked about. Because they realize that the liquidity in the markets and our local markets, as it comes back, it results in creating better results or better prices for the listed stock overall. It is better understood, it is better known in our markets, and our investors like those stocks, especially the 2 of the 3 companies Dayan mentioned were in healthcare. And in the UAE, at least, I know in Saudi Arabia there's a number of listed healthcare companies, but in the UAE there weren't any. They were highly sought after and will continue to be so. So that's one point. Volumes are very important, and we've seen that last year with the resurgence that Fadl talked about. We've seen, at least in the UAE, on DFM specifically, 4 or 5 IPOs in the second half of 2014. That's very important and is foretelling about what is to come as the market stabilize from recent events.
Is it just, I mean, the question is it just pricing, or is it probably they also had limitations in terms of minimum listing, which I think was another major issue in terms of why these companies sought a London listing rather than local listing. I think, as you said, when finally they found out that it is local liquidity that drives.
Yeah, the liquidity is here to support the shares that people know.
I don't think we should fall into an illusion in terms of the activity in the IPO market. Again, it comes back to the point of having liquidity in the secondary markets as well, because they are extremely intertwined to each other. I mean, we are talking about the capital markets having a sound, solid, robust, regulated marketplace. So if this is the case, I mean, IPO market is just one part of the story. The second part is, I believe it is more important and more relevant for the longer term sustainability of the firms, since they have to comply with the market standards, with the regulatory practices and principles. So in due respect, I mean, having a foreign listing or having a foreign IPO in another market for the local companies, it might be a bit of a short-term approach. It is my humble view on this, because we have seen such strategies not only in the MENA markets, but also in the other transitional markets as well. For example, some of the Russian companies, some of the Kazakh businesses, they have picked for London market for their IPOs through GDRs. But I mean, in terms of having interest from the investors, mostly from the institutions in the London market, they were very successful. But when it comes to the second part of the story, there's hardly any liquidity, which is a shame. So this is my conclusion, again, my humble conclusion is that the liquidity remains where the know-how and where the knowledge resides. So that should be definitely the home market. And there's a very good case of the largest Turkish GSM operator, which is Turkcell, and it is dual listed in New York Stock Exchange through ADRs, but liquidity in Istanbul, period. There is almost nothing in New York marketplace. So I believe we should definitely keep an eye on not only the IPO market, but also the liquidity, the secondary markets, efficiency and quality of the regulations and the market practices.
Do you think the drivers for the foreign listing are the same, companies in the GCC or it's companies in other parts of the world?
I believe there are some convergences. It is mostly because of the regulatory arbitrage. And I mean, since I was referring to some of the ex-Soviet, countries, and the regulations are not quite in line with the international practices, some of the companies, they basically opted for more liberal markets to basically get the attention of the investors. And I mean, aside from this, local and domestic regulators, they might have sometimes, strategies to get involved more with the IPOs. I mean, it might be about the prospectuses, it might be about the valuation and everything, and they have every right to do so because they also have a goal to protect the investors. But I mean, in the meantime, there needs to be an efficient, approach towards the issuers to make sure that they also get the most, outcomes and results in terms of their IPOs. Otherwise, it would be just a one-side approach for the investors, and it would not be sustainable. So there are, I believe, some convergences, and I believe this regulatory arbitrage, I don't know, it was the topic of the previous session, but this should be definitely on top of the agenda to keep an eye on for.
I would definitely agree with that, and I actually spoke to a Dubai-based lawyer earlier this week, and he actually raised exactly that point, that a lot of companies that decide not to list locally but rather London do it because they just feel the approval process is much more streamlined with the UK listing authority. They know once they submit the prospectus and the listing application, it will only take the UK regulator around 4 to 6 weeks to approve the whole process, and they know exactly what to expect in terms of comments and requirements, whereas often in the UAE, at least from the lawyer's perspective, he said it's often arbitrary what the regulator approves on one deal and provides waivers. They would not do on another deal, so it makes kind of difficult for issuers to plan ahead, because obviously an IPO process is a very long and challenging process, and whilst we obviously all want IPOs to happen, the teams that actually work on IPOs have to run the business on a day-to-day basis as well. So if you make that process more difficult to plan and integrate into the daily operations, it makes it less attractive for people as well to list locally.
In our preparations, we were trying to come up not with support of London, which is not paying for this conference, but to try and build the markets here, in the region. We're wondering, and you touched on it, Dayan, what kinds of teams we might build within your marketplaces, or probably mostly within each individual market, putting together lawyers, accountants, bankers, the exchange, and getting somehow an industrial kind of process so that it does go through more quickly and more cheaply, and it's easier to repeat and see what's coming. Do you see any of that in the markets?
We've seen a very long process reach a very important point in the UAE, where, if I recall correctly, back at least 10 or 12 years ago, the new changes that were adopted recently in the commercial companies law were proposed as exemptions from the then current law, and were taken to the Cabinet of Ministers to get approval, so that, or to get the exemption, so that a certain company would be established to mimic the Saudi Sabiq in the UAE, which was called Sana'at at the time. It was formed later, but in a different format. But that process started as a collaboration between lawyers, bankers, professionals in the industry, and the authorities.
But did the team stay together?
No, this was 12 years ago.
Yeah.
They couldn't have stayed together. But the changes that were recommended were finally adopted recently. It took a number of years for it to come out, but it finally came out. Of course, there are still some issues that need to be clarified, but it's a good step in the right direction. And it provides what Dian was talking about, selling down. At least we need to clarify that out, but it has been established as precedent by the Amar Malls IPO, so it will be allowed, we understand. And it allows family businesses to list or to sell 30%, and other companies to sell 30% as well. So it's an improvement, quite an improvement from where we were. And hopefully we can build on that with further dialogue with the government. And we have that dialogue between us and the regulator, at least in the UAE, for a long time. It again culminated recently, as I told you, we listed our company's shares on Abu Dhabi Exchange very recently, last December. On the second market, we are a private joint stock company, and we did not have a chance to list our stock anywhere. So we worked very closely with ADX, who Rashid is not here today, but he helped a lot on getting that achievement. And they worked alongside ESCA, the regulator in the UAE, and we got to the point where the second market was established, and we were the first company to list on it. It works out. It just needs collaborative effort from all parties.
I think, it's a business decision which advisor to use, but I think if we can have a specialized body that can do research, can give sort of information to streamline the IPO process rather than have each company going its own way, and then you'll probably have different interpretations of the regulations, and then you can get blockades of the IPO. We've seen that a number of times. So a bit of research, a bit of an independent body that can be a reference for all potential IPOs, I think would be beneficial.
I'm hearing from Dayan's experience in London that there is a readily recognizable process that you can sort of count on, and I'm not hearing that in these local markets each time seems to be starting over,
yes,
putting together a new team, not knowing quite how to go, and not having a ready pool of experts to draw on at all times. Give the clients, by all means, a choice. Needn't be the same people, but having 3 law firms lined up, choose, or 5 brokers lined up, choose, or whatever, and people at the exchange ready to sort of organize the process with a tick list.
Informally, there is what you just described. You have a number of lawyers amongst 40, 50 law firms in the UAE. There is 10 or 12 that have done previous IPOs and have worked with the regulator over these years. I think what Diane said, and the most important thing is adherence to the process that is described in the law book or the regulations book, because this is what changes every time. I've worked on 18 IPOs. Each time it was a different person at the regulator, a different person at the market. It's a completely different process altogether from each time to the other.
But at the law firms as well.
Yes, exactly.
So it's always a starting point, you know.
Start back at the beginning again each time. That's not
But
good.
I guess for all its shortcomings, we also have to acknowledge that we're comparing the London Exchange, which has been obviously in existence or in its sort of current form for over 30, 40 years, with local markets which have been, from a sort of international perspective, probably only really sort of been on global investors' radar over the last sort of 10, 12 years. So we're probably in a much earlier stage of development.
I can turn that around on you, Diane, and argue it the other way and saying, what happened to the latecomer advantage?
True.
It works both ways. It works both ways. One of the things we spoke about amongst ourselves in the preparation also, and you just began to touch on it, and please go forward, is research and independent research. The brokers do research, others do research. That's good, but we thought amongst ourselves that there really is room for a lot more to be done. We were wondering if somehow in the region a consortium could not be put together that would provide a wider range of independent research on all kinds of companies. There would be governance problems, and each of your markets would be saying, I need more on mine than somebody else, but these things are solved through good governance. I'm wondering if you'd like to take that one further.
Yeah, sure. I mean, I'll talk about research in general, and then we can limit it to research concerning IPOs. The research industry is still being looked at not in a very positive way. I mean, often as a company, we issue a sell recommendation on a company, on a listed company. Then we start getting phone calls. Managements are unhappy, threats of, no clients calls. And we see this quite a lot. It's as if the research team has to always be positive, buy recommendations. It will take time for the perception of research as an independent view on the listed companies. If I sort of narrow this to the IPO market, we often come into sort of somehow conflict with potential IPOs in terms of pricing. Now, in the earlier stages, IPOs were priced, and the company would assign an advisor, do a valuation, and then go for the IPO. In some markets, as in the UAE and in Bahrain, this big building exercise has started, which is solving the problem in a big way. But if we can, as regional markets, if we can expand this by having sort of specialized research body that caters for IPOs, let the listed companies research struggle a bit, but an independent research body that can help potential IPOs, I think, would be a great...
I want to go back to Mustafa's point. It's not enough to have research for the IPO if the secondary market is going to die. I was thinking more of a consortium that could keep going through the life of the listing.
Brokers need to
not just brokers,
make a living.
Yeah, well, that's right.
For secondary listing and the secondary market.
Okay. That's right, you do, and it's very important to have those pricing.
But if you look in the US, for instance, you do have your bulge bracket banks who obviously lead in terms of flows, but there's a very large market of pure research providers, and they are well accepted, and actually, they can make a living out of it. So you you don't have to have a trading platform in order to make money with research. So I think I don't see why there couldn't be something in this region.
I believe research is a self-developing material, or in a sense, animal. So I mean, if the market is diversified enough, I believe the research would be definitely there because of, I mean, in line with the demands of the investors as well as the issuers and the brokerages. But under the circumstances in the MENA markets, I would definitely agree with, pooling the resources, having an initiative or a consortium in terms of the research, broadening the capacity of the research. That would definitely enable, that would be definitely one of the enablers for the IPO market. But I believe there is a complementary element of having some other products in terms of talking about the quality of the research, or having some research at least in place. So, I mean, we are talking about the IPO market here, but hardly any corporate debt market, right, in place. I mean, hardly any derivatives, as it was discussed yesterday and today in other sessions. So, I mean, I remember that you were commenting in terms of the oil commodities and some other futures yesterday. I partly agree with the fact that, I mean, if you like to, hedge your risks towards, oil prices spikes and everything, you can just, invest in some of the companies that are investing in oil production and everything. It is partly true, but I mean, I would also tend to comment on the fact that, I mean, if you like to have a real hedging element in place, you would definitely consider some other products, commodities, futures, options, whatever they are, to make sure that there is a solid investment strategy. So research again is a developing, self-building material here, but we need to also make sure that IPO market is not alone. It is coupled with the liquidity in the secondary market, but we should also, look forward to having some complementary markets and products in place.
In our preparation, we also, just one last addition to that, as homework for the exchanges, better post-trade services, better infrastructure, so that clients around the world are a little bit more comfortable with coming in. That needs some development too. We're back to the overall question, and I'll go back into details. At the moment, we've come back up to a very general level of the fact of the exchange needing to broaden its standards and service offer and product offer. And that goes back also to what Deirdre Summers was saying about having pride in being listing here. It's not just the listing, it's the overall package that they get.
It's the ecosystem.
It's the ecosystem again.
But should we also, I mean, just to basically, address my ignorance here, I mean, there is this, general perception in terms of the MENA markets. It's mostly the state-owned businesses that go, public in the GCC markets particularly. So if we are really, trying to attract more private businesses, I mean, family businesses mostly, to the marketplace, I mean, research definitely, plays a role there. But I mean, alongside the investor education, I believe we should also, drive an approach towards the family businesses, owners, and everything to make sure that they are aware of the perks, they are aware of the merits of the capital markets for their refinancing or financing needs. So, I don't know if, I mean...
And their business reputations. This part of the world invented trading. There's nobody who needs to know more. Ideally, going beyond the region, it should be wonderful. I am a listed company on Exchange X as part of their marketing, as part of their growth. And it's rare. It's rare. It does happen in other parts of the world, but it happens less than 10 or 20 years ago. I'm also going to go back to Mustafa's point a few minutes ago as to the return of a more favorable environment for IPOs. Just to give a context with some numbers on that, the high point of IPO in terms of value of money raised was 2000, 2001, when it was $1 trillion worldwide, ahead of the dot-com crash, of course. We're back to more than $900 billion in 2014 worldwide using WFE stats. But that's 900 or 950 billion compared to 1 trillion. But that's much lower compared to the overall size of the world economy. So that the exchange motor is being less used in terms of capital formation than other sources 15 years later. So there's definitely room for a catch-up on IPOs. I hope there's the need. Just wanted to put some perspective. Yes, things are better, but we're not at all back to where we were relative to the overall size of financing this bigger economy.
Same valid assumption for the SMEs, not only in the MENA markets, but globally. I mean, the SMEs that are enjoying the capital raising opportunities in the capital markets, it's only 5% overall, which is very minimal. But I believe, I mean, this should be one of the topics that we, I mean, when the IPO, discussion is in place, that should be definitely dealt with.
But I mean, fundraising back in the, and one has to look at the level of interest rates.
Oh,
I mean, zero interest rates right now. Why
it's
should
a killer.
I?
It's
yeah.
a killer.
Why should I float? I can get fundraising at free. Banks are dying to lend.
Are banks trying to lend? I'm finding some constraints in Europe with balance sheet constraints, but Basel III is limiting the size of their balance sheet. That's one positive force in our direction.
But generally, fundraising is a lot cheaper than what it was back in 2000.
And surprisingly, private placements have been
that I can
very
believe.
active recently. One of